Hello dear traders, the US main stock indices continue climbing, reaching new highs. In November, market sentiment was mainly bullish, with the most considerable rally seen in many years. The indices paused just one step ahead of their yearly peaks. Notably, the overall dynamic is upward, which raises the likelihood of reaching new yearly highs in December. Compared to the lowest levels recorded at the end of October, the benchmarks have added more than 11%. Such a jump in the stock market could be explained by several factors. First of all, traders are looking forward to the end of monetary policy tightening by major central banks. The decision could be taken amid inflation slackening in the largest economies and lower pressure on labor markets. Stay tuned, the financial market is always rich in unexpected and interesting events. Watch the video till the end and share your opinion in the comments. Last week, all eyes were turned to Jerome Powell's speech delivered on Friday. Although traders have already priced in the possibility of the key rate cut in 2024, the Fed chair's speech is still of primary importance. Powell said that U.S. monetary policy was slowing the economy as expected, with a benchmark overnight interest rate well into restrictive territory. Investors positively welcomed such news. Nevertheless, he refrained from dovish comments, warning that it was too early to wait for monetary policy loosening. Curiously, markets ignored this statement. Now they are waiting for fresh information that will help them make predictions and find hints about a switch to a looser monetary policy. In other words, investors are trying to understand when the changes will begin. The Federal Reserve will hardly raise the benchmark rate on December 13th. The likelihood of such an outcome is 97%. In addition, a day when the regulator may cut the benchmark rate is approaching. At present, 80% of CME Group futures market traders suppose that the event will take place as early as May. Such a change in monetary policy is considered a positive factor for risky capital markets. On Friday, all three U.S. main stock indices showed a rise as investors were digesting Powell's comments and economic figures. Thus, the S&P and Dow Jones added 0.5 and 0.8% respectively, reaching a new yearly high. The Nasdaq increased by 0.5%. Wall Street opened a new trading week with a slight decline. This could be explained by the expectations of labor market reports. In general, the previous week was quite positive, marking the fifth consecutive week of gains in the U.S. stock market. Last week, the Dow Jones rallied by 2.4%. From a technical point of view, the market situation is likely to be favorable. Fundamental factors are providing the market with mid-term support despite overbought conditions and euphoria among investors. Technical indicators suggest a jump to new yearly highs, which could be seen as early as this month. Nevertheless, investors could remain cautious until the end of the week, anticipating new drivers. The market situation could be shaped by the non-farm payroll data slated for release on Friday. Economists suppose that the number of employed people in the non-farm sector may advance by 175,000. The unemployment rate is likely to stay at 3.9%. It also will be wise to pay attention to changes in average earnings. In the given period, the S&P 500 rose by 0.8%. It lacked just 0.2% to touch and consolidate above the targeted level of 4,600 points. However, it could be reached soon. A breakout of this level is likely to occur this year. What's more, the stock indices could settle above their long-term resistance levels. It means that in 2024, the S&P could climb to all-time highs near 4,800 points. For reference, the support level of 4,540 turned out to be very strong. The most possible scenario suggests further short-term growth in the S&P. It will be better if the indicator leaves this area before resuming the upward movement. The rise could also be explained by favorable seasonal conditions typical for the end of the year. Nevertheless, now it will be more difficult to gain in value than in early November. The nearest support levels are located at 4,540, 4,500 and 4,470. The Nasdaq Composite advanced by 0.4% during the given period. In November, the index rallied by 10.7%, supported by the Magnificent Seven, which includes stock of tech giants. This year, the Nasdaq has gained a whopping 36%, manifesting a confident recovery after a drop in 2022. At the moment, it's very important to be patient and able to benefit from various market situations. Traders should increase their positions, avoid buying overestimated stocks, and diversify their portfolios. It's high time to make a list of attractive companies amid the ongoing rally. The closest attention should be paid to such firms as Alphabet, Meta Platforms, PepsiCo, Salesforce, Kisco, and T-Mobile. Let's take a closer look at some companies. Thus, Pfizer shares lost 5% at the end of the previous week, just after the company announced that it would not move forward with phase 3 studies on its twice-daily weight loss pill. Meanwhile, shares of Salesforce continued their rally by adding 3.2%. Paramount's shares jumped by 9.4% amid the news that the entertainment company and Apple had discussed bundling their streaming services, plus 0.7%. As for the corporate news, Alaska Airlines agreed to acquire its rival Hawaiian Airlines in deal valued at about $1.9 billion. We continue to monitor the stock market situation to keep you abreast of the latest events. Subscribe to our channel and leave comments. We are working for you, making the most relevant video reviews every day and every week. That is all for now. See you later.